Welcome to Markets Now. I'm Michelle Rook along with Rich Nelson with Allendale. Well, livestock futures leaning a little bit lower this morning. We're quietly mixed in the grains. And Rich, I want to start off talking about corn because we're still holding the March lows. The question is, are we going to continue to hold those?
That's really the big question here for us. The July contract came within 4 cents of retesting those lows here in yesterday's session. We're not too far off that discussion here for today's trade as well. So we do look for ourselves one last little spike low, maybe take those lows out, and we do have a waiting chart gap right there. But keep in mind, any further lower trade, a lot of us will start questioning when exactly do we need to get a spring low established. So we're probably starting those questions these next few weeks here.
So what is the normal seasonal pattern there? And if we do put a low in, what kind of a recovery do you think we could see?
For the July contract specifically, the seasonal does call for a two-pronged approach at getting a spring low established. Once in March, then they usually take out those lows again in April, but not by very much. And that usually is the established low from that point. And this is for the July corn contract very specifically. So one question for us is perhaps another 2 or 3 weeks of pressure before we start our discussion about getting some summer weather risk established in this market.
Gotcha. Yeah, like you say, that's just for the July. Old crop is still supported by strong cash and tight supplies of old crop, but new crop is trading kind of in a world of its own. And I guess the question there is, can we hold the lows there in addition, especially with planting, which is really picking up now?
And really good point. On the positive side, the last couple of days, we did have two separate days of actually breaking and testing those prior lows from July, but they did hold. And certainly from us on a lot of the fundamental standpoint numbers, a lot of us are suggesting maybe around this 538, 540 range for that December corn contract. Perhaps that's all we need to have as far as really needed downside. So questions about both old crop and new crop, and perhaps establishing some type of lower price for good support these next few weeks here.
Let's talk about soybeans. We've had a big correction there. I think the July has had well, at least the May has had at least a 90 cent or more correction. But the funds have been selling here. And do you think that liquidation is about done? Because I know some of it has been predicated on some of these concerns about exports.
You're certainly right. And a lot of this export discussion is still with us. The past 11 weeks have seen sales only, in fact, 60% below the 5-year average. We're really going to open up this potential ending stock discussion on the soybeans moving from USDA's 210 million bushel. Really, this market's back up at 250, but we can have some discussions if this export sales issue does not get fixed, perhaps up to 275. So definitely this price reaction and potential movement into the 13s, really, really important to follow these next weeks for soybeans specifically.
Right. And part of what's pushing that as well, that export continuation to be bearish here, is just that Brazil's price is far below our price right now. And we're going to be dealing with that for a while, aren't we?
We certainly are. And keep in mind, this is the peak right now for Brazil's soybean export season. The corn export season really starts in about 2 months of time. So this is a very tough time of year for us on the U.S. side to say that we're going to retake the export market or perhaps beat somebody on a price issue. So in terms of our discussion for old crop corn and soybeans, we really don't have a lot of good news to suggest that there's going to be any major change yet in this problem stance right now.
Okay. We've had really fast planting, though, in terms of soybeans, well ahead of the 5-year average. So will November continue to maybe be where we see a lot of pressure as well, or not?
For the November specifically, we do have some questions here. Keep in mind here for this market, we've come quite close to those prior lows here from last month, from March, 1247.5 on that Nove contract. We do think there's probably a chance at maybe testing or re-breaking those lows. Our main concern, though, is specifically about old crop soybeans with this export sales issue. We do wonder if perhaps November might be able to stabilize at this lower prices in the next couple of weeks, and perhaps maybe have a larger discussion about summer weather in the weeks ahead here.
Gotcha. What about the wheat market? Speaking of weather, obviously we've had some rain chances in the forecast that have kind of kept a lid on that market, or pressed that market, in fact. And, we had a little bit of precipitation overnight, but what is this market going to continue to trade? Is it going to be weather? Is it going to be Black Sea headlines? What?
So our discussion right now for this winter wheat discussion, 2 to 3 inches here for Oklahoma, 1 to 2 inches here for Kansas in general. Certainly getting the trade's interest, but like you mentioned here, a lot of us might question exactly what type of help that would bring to this very, very troubled crop. So at this point in time, we're still suggesting that this market is probably in the process of trying to find some type of spring lows. We're not quite saying it's there. And especially with the Chicago contract still having problems hitting new contract lows past couple days, there's certainly no sign yet this is a clear buy for this market just yet. But certainly our discussion about production should be coming around in these next couple of weeks.
Yeah, and we're trading two different crops there. And Chicago has obviously been trading at a discount to where the Kansas City futures are. And there's been a big, wide disparity in terms of that relationship, hasn't there?
Certainly right, and a lot of us are trading wheat now, no longer on just straight trades by contract. A lot of us are trading simply spreads, trading the Kansas City off of Chicago or Minneapolis against Chicago. And at this point in time, looks like that's the way this market will continue to define these trades more by spread action than straight pricing. So a lot of us questioning whether we will retake out those prior highs from just a week and a half ago on the KC Chicago spread. Certainly, as we talk about production, probably a likely issue these next few weeks.
Yeah, that thing got up to like $2 or better. So that was historical. What about Stats Canada report out this morning? Talk about what that showed in terms of wheat production this coming year.
Sure. So the wheat side, we did have an expectation for higher numbers. Trade expectation was for 25.4 million acres last year for all wheat to move up to 26.3. Stats Canada reported 27, so a little higher than the trade estimate. We might have just a little pressure on the wheat side, but in the realm of all the other things going on here today, obviously with this week's weather in the U.S. side, as well as the Russia and Ukraine discussions, it's certainly a full boat of news here, which kind of clouds this wheat discussion.
Yeah, no doubt. What do you expect there in terms of the corridor? Is it going to shut down on May 18th? Is that kind of what we're gearing up for?
That's a really good question. I don't have a good solid answer at this point, but in my personal opinion is let's assume the deal will get renewed until it does not. Prior 2 rounds had a lot of talk from Russia, but so far they did agree. At this point in time, I'm still leaning for them to renew a deal, but we'll certainly see here.
Right. And as long as we were talking a little bit about new crop forecast, the Ag Attaché putting out some numbers for Argentina and Brazilian production going forward, or at least acreage. Talk about that.
We find it interesting that the ag attaches here for both Argentina as well as Brazil released some new crop estimates. So the crop which will be planted this fall and harvested in 24. Discussions for the ag attache on the Argentina side, corn going from 12.6 million tons this past year, moving up to 19.5. I'm sorry, that's the wheat number. Corn number is going from 37 up to 54. So basically, the attaches are reminding us that this is a this year problem, and for right now, they're plugging in trend yield for this coming new crop, which will be the 24 harvest. So reminding the trade that as long as we can get by this year's tight spot for their production in Argentina, perhaps we'll have larger supplies ahead here.
Yeah, you add Brazil and Argentina together, that's going to be a monster crop for sure if they get it planted into
It
production.
certainly will be.
Yeah. Cattle market. We're continuing to see consolidation there. There's been talk about a blow off top a couple weeks ago. Are you in that camp, Rich? Are the technicals indicating that we do have more downside risk to this market?
I would have thought we would have peak in place 3 weeks ago quite easily here, if not 4 weeks ago. But a lot of trade is still pointing out that this last leg of understanding on the supply side has changed. The trade is not expecting these seasonal numbers to build back up in April and May and early June as they normally would. So a lot of us questioning about this potential downside for this market. Keep in mind, futures are implying another $4 or $5 break for cash cattle these next few weeks. Right now, a lot of us are simply waiting for that to happen. There is an open gap on the chart here just under our feet for the fat cattle. That's likely a good target in the short term, but beyond that gap on the downside, we're not quite sure how much is waiting for us.
Yeah, the cattle bulls point out we're not even into the tightest numbers yet in terms of the inventory. So something to watch there. Cash cattle this week, what do you think? Are we going to be able to hold this thing steady or not?
I do think that cash cattle has topped, but my question is how much downside do we have? For
Okay.
this week specifically, keep in mind last week was a loss week, anywhere from one in some areas $2 here from the prior week. For this week, we do expect steady trade, but the general trend probably for the next couple weeks will be maybe a dollar lower. Keep in mind that's kind of factored in by these discounts in the future. So we do have lower prices for cash factored in, but we're not quite sure how much lower beyond that point.
Yeah, no doubt. All right, hog market. Certainly we got a little pop Friday and Monday, but we didn't see any follow through yesterday. And really, the cash market has to bottom here first, Rich, for that market to sustain any rally, right?
It's certainly right here. So last week we had 4 days from Thursday through Friday of losses on the cash hog side. Slightly higher trade for the early week action here this week. So that's leading people to say maybe we're stabilizing the cash hog market. On the positive side for wholesale pork, we are trading back to $1 to $2 over that prior low from January. So at least wholesale pork is stabilizing. Cash hogs have stabilized. We can say that. But for right now, we're not quite sure if it's time for futures to rally. And people have been pointing out that futures still have a little premium. So we're not quite sure how much of a rally could be seen in the June contract.
Yeah. So, what are you watching there, or what are the technicians watching to get the funds who are, I think, near or record short to start blowing out of some of that short position and give us a rally?
And certainly for the chart side, a lot of us are pointing out we did have 3 days in a row last week with lows relatively close to each other. We just really want to see at least 1 week of stability. Not even a rally. We just want to see 1 week of stability. So a week where we don't put in new lows. So at this point in time, I think the chart people just want to watch this market stabilize for a few more days before making any moves on this side. A lot of us have been burned on this whole decline these past few weeks. So well, it'll take a little more than just 1 or 2 days of higher cash hog trade can get to change in minds here.
Yeah, it's been pretty bleak, and producers saying, boy, they're not at levels right now where they're making any money. That's for sure. So, all right. Thanks for joining us, Rich Nelson with Allendale, and that's Markets Now.